Build to rent is a red hot investment strategy that's becoming the fastest growing sector in real estate and is solving problems for investors, renters, and builders all at once. In this video, I'm going to show you exactly how BTR works, why it's exploding right now, and how smart investors are using it to build massive wealth. After watching this, you'll understand why build to rent makes so much sense in today's world. My name is Bishoy Habib, and I'm the realest real estate attorney you know. I've been practicing 13 years, and in that time, I've closed over 1,000 transactions totaling $12 billion. Just 5 years ago, I'd never heard of build to rent. Now, I'm watching this sector absolutely explode as investors discover this gold mine hiding in plain sight. So what exactly is build to rent? It's simple. Instead of building houses to sell, developers build entire neighborhoods of single-family homes specifically designed to be rental properties. Think of it as the apartment complex model, but with actual houses instead of units in a building. But here's what makes BTR different from traditional rentals. These aren't old houses that someone decided to rent out. These are brand new homes built from the ground up with renters in mind. Better layouts, lower maintenance costs, and community amenities that make renters want to stay for years. The numbers are absolutely staggering. Build to rent starts and permits jumped 24% in 2024 alone. We're talking about over 100,000 new BTR homes in the pipeline. To put that in perspective, that's more than the entire housing in cities like Charleston and Savannah. And in Tampa Bay, where I am, we have been a top 10 national market for BTR since 2023. But here's the crazy part. This is just the beginning. Industry experts expect BTR will represent 7% of all single-family construction in 5 years. That's a massive shift in how America thinks about housing. So you may be asking, why is BTR exploding right now? Well, there's 5 massive trends that are creating the perfect storm. First, home ownership is becoming impossible for millions of Americans. In fact, I just posted a graphic on my Instagram yesterday that showed housing in America is the most unaffordable it's ever been in history, and it's not even close. Even prior to the 2008 crash, homes were way more affordable than they are today. The median home price has doubled in many markets while wages stayed flat. So that means a family that could afford a $250,000 home 5 years ago now needs $500,000 for that same house. They're not choosing to rent, they are forced to rent. Second, millennials and Gen Z actually want different things than their parents. They want flexibility, amenities, and someone else to handle maintenance. They don't want to spend weekends doing yard work or replacing water heaters. BTR gives them house-style living without house-style responsibilities. I am a millennial, and I can attest to this. Most friends my age are still renting, partially because we're a generation of convenience. It's even worse with the generation below us, the Gen Zers, by the way. That is the Uber Eats generation, where convenience is just of utmost importance. And so our habits are different than those of our parents and grandparents, and so that's part of this. Third, traditional apartment living isn't cutting it anymore, especially after COVID. And in my opinion, COVID is really what pushed this to the forefront because people wanted space. They didn't want to live in tight parameters. That was the first time I heard about it during COVID, 2020. And COVID is what started this. People want yards, privacy, and space to work from home. But new apartment construction is expensive and it faces massive regulatory hurdles in most cities. BTR gives renters the lifestyle they want without the complications developers face with multifamily construction. Fourth, the rental shortage is severe and getting worse in some places. We're short millions of rental units nationwide, which means rents keep climbing and vacancy rates stay near zero. BTR is filling that gap with quality housing that actually meets market demand. Fifth, institutional investors discovered that single-family rentals can be incredibly profitable if you do them right. Not buying one home at a time, but building at scale. Companies like American Homes for Rent and Invitation Homes proved the model works at scale, and now everybody wants in. That's how it works, right? So now that you understand why it's in demand, let me walk you through exactly how BTR works because the business model is brilliant in its simplicity. Step 1. Find the right location, as always with real estate. BTR communities work best in growing suburbs with good schools, job growth, and limited new housing supply. You want areas where families would love to live but can't afford to buy. Step 2, buy large parcels of land. Think 50 to 500 acres. This lets you create entire communities with economies of scale that individual rental property investors could never achieve. Step 3, design homes specifically for renters in mind. This means durable finishes, efficient layouts, and features that minimize maintenance requests. Think luxury vinyl plank instead of hardwood, quartz countertops instead of granite, and smart home technology that can be monitored remotely. Step 4, build amenities that justify premium rents. pools, fitness centers, pickleball courts, dog parks, saunas, playgrounds, the kind of things that would cost individual homeowners thousands or tens of thousands to install, but all of us want. Step 5, professional property management from day one. This isn't like some single guy walking around an apartment complex. This is professional management. BTR communities have leasing offices, maintenance teams, and systems that make tenant experience feel like you're living in a luxury apartment. And that's kind of the point. You want that service. Now, the financial model is what makes investors go crazy for BTR, but let me break down some of the numbers. So in this day and age, and I'm on record as saying, you cannot make money owning single family properties anymore, or you can make money, but you can't create wealth. Why? Everything's so expensive. Taxes, insurance, mortgage, the interest rates, the cost of the actual property, labor, everything. So traditional rental properties might generate 4 to 6% cash on cash returns, which is terrible for all the risk you're taking. Build to rent communities are consistently hitting 8 to 12% returns, so literally double what a single family property would return, sometimes higher. Here's why. First, you get better rents. A new build to rent home in a master plan community can rent for 15 to 25% more than an older rental house in the same area. Tenants pay premium rents for premium product, obviously. Second, there's lower vacancy rates. BTR communities typically run 95% occupancy compared to 85 to 90% for individual rental houses. How would you love to have 95+% occupancy and higher market rent? When tenants love where they live, they don't move. My dad had this tenant that lived in one of his properties for like 25 years. He paid the house like 4 times over. So that's a good tenant, right? So imagine having a bunch of those. Third, economies of scale. Maintaining 200 houses in one community costs way less per unit than maintaining 200 scattered rental properties. One maintenance team, one management office, bulk purchasing power for repairs and improvements. Fourth, the appreciation potential. You're not just buying existing houses, you're creating new housing supply and growing markets. As the community matures and nearby areas develop, property values typically increase faster than individual rental homes. I saw a deal recently, just to kind of give you some flavor for how this looks, where an investor purchased a 150 home BTR community in North Carolina, which is a big area for this, for $45 million. The average rent is $2,400 per month. His occupancy is at 97%, and the community is generating over $4 million in annual net income. That's a 9% cash on cash return, and the properties are appreciating at a pretty high rate, between 8 to 10% annually. But build to rent is not just about investor returns, it's actually solving real problems for everyone involved. For renters, BTR provides the lifestyle they want at a price they can afford and a convenience factor they love. Instead of choosing between a cramped apartment or an old rental house with maintenance issues, they get a brand new home in a well-managed community. For builders, the BTR business model provides predictable revenue without the hassle of retail home sales, and it's not so tied to how the market is doing. I mean, everything is in some sense, but you can have this BTR model, and as long as the cash flows are there and there's always going to be people needing homes, you can build with confidence that on the back end there's an exit. When you're building to sell and prices drop, and the market tanks as it did in 08 and it's kind of doing today, that's tough if you're selling individual houses. So it gives the developers a peace of mind. There's no more dealing with individual buyers. There's no more mortgage delays or closing complications. They build the community, they sell it to an investor, and they move on to the next project. Or in some cases, they stay involved, which we'll get to in a second. Now, for local communities, the advantage is that BTR provides quality housing that contributes to the tax base without adding costs. These communities are well maintained, professionally managed, and typically attract stable long-term residents. And they're a little bit on the higher price end for rentals, and so you're naturally going to attract a cleaner clientele as well. And so that's what cities want, right? Even for traditional homeowners, BTR helps by reducing pressure on the for-sale housing market. Every family that chooses BTR is one less bidder driving up home prices for people who do want to buy. Now, BTR is not without its challenges. Nothing is, perfect, and smart investors need to understand the risks. The first challenge is very expensive to get started. There are very high capital requirements. Unlike single family and duplexes, you can't get into BTR with $20,000 down or $50,000 down. Most BTR projects require millions in initial investment, although some developers are creating ways for smaller investors to participate through funds or partnerships. Now, the second challenge is the location selection, because that's critical, as it is with all real estate deals. BTR works great in growing suburban markets, but it can be a disaster in declining areas. You need population growth, job growth, and housing demand that will sustain premium rents for years. The third challenge is regulatory risk. Some municipalities are getting nervous about large-scale rental communities and considering restrictions, so you need to understand local zoning laws and political climate before committing to a BTR project. The most similar analogy I could think to this is what happened with the Airbnbs, where there was a huge boom, obviously, and people went crazy and bought a bunch of them. But the local municipalities, counties, cities, towns, villages, whatever, they didn't all necessarily buy in, and some of them went very pro Airbnb, some of them were very against it, and the ones that were caught in the jurisdictions that were against it really got shafted. So just be careful. Understand the political climate in the place that you want to go. There are markets where it's known and welcome, like Arizona and Florida. You know, that's a generalization, but just make sure before you invest. And the fourth challenge, management complexity. Running a build-to-rent community is like operating a small city. You need professional management teams, sophisticated software systems, and the ability to handle everything from lease admin to community events. But for investors who understand these challenges, BTR represents one of the best risk-adjusted returns in today's real estate market. There's a lot of smart money moving into BTR today. Private equity firms, pension funds, and high net worth individuals are allocating serious dough to this sector. The institutional money recognizes that BTR combines the cash flow benefits of multifamily with the appreciation potential of single-family homes. We're also seeing innovation in how BTR projects get financed and structured. Some developers, as I mentioned earlier, are retaining ownership and bringing in capital partners. Others are selling communities to investors who want fully stabilized assets. The rental market fundamentals supporting BTR aren't going away anytime soon. Home ownership rates for younger generations keeps declining while rental demand keeps growing. BTR is positioned perfectly to serve this massive demographic shift. For potential investors, my advice is start educating yourself now. Understand the markets where BTR works best, the key players in the space, and the financing options available. This sector is still young enough that early movers have a significant advantage. It's just getting started. The build-to-rent revolution is happening right now. It's creating wealth for investors, solving housing problems for renters, and reshaping how America thinks about single-family housing. Those who understand this trend and get ahead of it are going to be the ones who make the most, as always, as this continues to explode. Build to rent is not just the hottest sector in real estate, it's the future of how Americans will live. The question isn't whether this trend will continue, the question is whether you'll be a part of it. Now, if you found this video helpful and want to learn more about emerging real estate investment strategies, hit that like button and let me know in the comments what you want to learn about next. Thanks for watching, and I'll see you next time.